Hello, ladies and gentlemen. Welcome back to Reserved Investments. So today we are going to talk about the difference of speculative bubbles versus speculative frenzies. And what's causing me to do this video right now is the fact that I'm getting a lot of emails asking me, Sean, are modern era Pokemon cards in a speculative bubble? The correct answer is no, but they are in a speculative frenzy. So this, of course, raises more questions where a lot of people then are asking me, well, Mr. Hotshot, what's the difference between a speculative bubble versus that of speculative frenzy? So that's why we're having this conversation right now. Now, for those of you that don't know who I am, boy, are you in for a treat. I teach collectible finance right here at Reserved Investments. Now, some of you are going to either love me as a result of that if you are new to this channel. Some of you out there are going to hate me as a result of that, because what I do is I teach the fundamentals as to how to allocate capital through the antiques and collectibles trade with the goal of making money, whether that be over the short term or over the long term. So unfortunately for some of you, I'm sorry to state, I'm not here to hold your hand and walk down memory lane while you tell me with tears in your eyes how you felt the first time you saw Star Wars on the big screen, or how your hands were shaking the first time you opened up your very first pack of Pokemon cards, or the first time you played a Nintendo video game, or the first time you read a Spider-Man comic book. I assure you, I too have an emotional attachment to these items that we all love and covet and collect. But at the end of the day, I'm also educated in finance. This is a collectibles finance channel as a result. So now that I said all that, let's dive right in. Now, before we talk about understanding the differences between a speculative bubble and a speculative frenzy, there are key points to keep in mind here. Number one, you need to be wary of any type of collectible that is only being bought due to its perceived monetary value on the secondary market. Meaning, if everyone is buying the collectible simply as a financial future investment, caution needs to be employed. And this is something in the year 2025, the modern era of collectible hoarding and speculation, this falls on deaf ears. If you get in my DeLorean time machine and you go all the way back, 1950s, 1960s, 1970s, 1980s, 1990s, early 2000s, you're going to see examples where when modern era collectible prices were accelerating in value and people bought in at that particular point in time, if they held those items over the long term, pretty much 9 chances out of 10, they lost money. They lost a substantial amount of money. We are kind of in this new era where everybody is getting involved in investing in antiques and collectibles. They're looking at these markets as an alternate asset class. So it is a little bit scary as to how much money is changing hands, especially when we look at modern era collecting markets like that of modern era collectible trading cards, whether it be Magic the Gathering, Pokemon, Flesh and Blood. Even if we look at modern era video games, Lego sets, a lot of these items are being hoarded in mass. And unfortunately, a lot of these individuals do not understand how collectible finance works. Another thing you got to keep in mind is that there are collectibles that have true organic demand, items like vintage comic books, Pokemon cards, whether they're vintage or modern, they do have organic collectability, vintage video games, vintage toys, items of that nature. And there's also collectibles that rely solely on what is known as mass-produced scarcity. These items, of course, do not have true organic collectible demand. Items like Pogs, Funko Pops, Beanie Babies, Labubus. If you don't know what a Labubu is, I did a video on that. That's the newest craze. Go look that up. Labubus come to us from a company called Pop Mart, and they're actually imported by China. That's an interesting market that is developing at present time. Notice how I hesitated when I said market. You guys can kind of read behind the lines there. So that's very interesting if you want to learn about mass-produced scarcity. Now, the key point here is whether or not you have a collectible with organic demand, like modern era Pokemon cards, video games, whatever it is, or an item that does rely on mass-produced scarcity, and I just named some, Funko Pops, Beanie Babies, Pogs, Labubus, both these types of collectibles can experience both speculative bubbles and speculative frenzies. Now, anytime prices go up faster than true organic demand in any market, you got a problem. You got to pay attention to the market dynamics because it's flashing a big red warning sign. And a lot of you guys don't see it, and that's where you get into trouble. And that's why I teach collectible finance. Now this brings us to the crux of the video. What is the difference between a speculative bubble and that of a speculative frenzy? Well, here we go. The definition of a speculative bubble. A speculative bubble occurs when asset prices rise significantly beyond their true intrinsic value, which is driven primarily by financial speculation rather than underlying financial fundamentals. Now, this is where it gets a little bit complex because remember, we're talking about antiques and collectibles. These items have no underlying cash flows. You cannot compare a rare coin, a piece of artwork, a Pokemon card, a video game, a comic book to an asset like a share of stock from a well-established dividend-paying company, or an S&P 500 index fund, or a corporate or government bond. Those particular financial assets, they have underlying cash flows. You can analyze those underlying cash flows. When it comes to antiques and collectibles, it doesn't matter what the antique or collectible is, it's all speculative. As a result, there's a lot more risk in these markets than other markets that have underlying cash flows. This also applies to markets like crypto, Bitcoin, gold, silver. Those items have no underlying cash flows. So those of you that are investing solely in items that have no underlying cash flows, keep in mind, you are pretty much partaking in the greater fool theory. What the greater fool theory states is, if you're buying an item for $100 and let's say that you hold it for 10 years and you go to sell it in the open market, you're hoping that someone, i.e. a greater fool, comes along and pays you more than $100 for what you paid for that item so you can turn a profit. That's what makes investing in items with no underlying cash flows so inherently risky. There are no financial fundamentals. Now, talking about a speculative bubble. When all this happens, when asset prices rise significantly beyond their intrinsic value, driven primarily by financial speculation rather than underlying financial fundamentals, this is when investor enthusiasm and speculation eventually take over, causing prices to detach from reality, from the basic fundamentals of the market, and inflate to unsustainable levels. A great example of this in action, if we get into my DeLorean time machine and we go back right before the pandemic. If you guys remember, when I started this YouTube channel, one of the first things I told you guys was the market for graded video games is being allegedly manipulated and overhyped. And that was happening right around 2018, 2019. We started to see a new grading company, a lot of games come on the scene. A lot of auction companies were touting this new field of collectibles where now graded video games are going to be the next great asset class. And people like me, people like Pantheon EST Punk, people like collectibles expert Harry Rinker, people like Carl Jobst, all told a lot of you guys that this market was entering a bubble. And sure enough, prices shot straight up to the stratosphere. Prices shot past the moon. Prices shot past Mars. Prices shot all the way up and around your anus. Because guess what happened next? After a few short years, that market was unsustainable. Prices dropped anywhere from 20 to 80%. The market crashed. That is a prime example of a collectible with organic collectability that entered into a massive speculative bubble. And if you are educated in collectible finance, you would have been able to see that from a mile away and go, hey, I'm steering clear of that market. Or better still, if you had those items, if you sold into the hype at that particular point in time, like I did, you made a ton of money. You did very well because people were willing to pay a premium for most of those items. And today, if you do a search of some of those games that sold for a significant premium, if you do a completed auction search on Heritage, on any of these auction sites, even on eBay, you're going to see prices have fallen significantly since then. And a lot of those prices have yet to recover. There's signs of hope in that market right now, but still, prices are in the doldrums for a lot of that stuff. There are certain surprises, certain new highs being reached in some of those items, but for the most part, they pretty much flatlined after the crash. And that's bad news over the long term. Let's be realistic here. Now, if we want to look at other speculative bubbles throughout the antiques and collectibles trade, obviously, pretty much every couple of years since the 1950s, 60s, 70s, 80s, 90s, early 2000s, there's been a lot of markets that have been affected by both speculative bubbles and speculative frenzies. Case in point, those of you that were alive like me back in the mid-1990s, Beanie Babies, Pez dispensers, if you guys remember the re-release of Star Wars figures that occurred right around 95, 96, when Lucasfilm announced that they were working on the prequels. The Power of the Force 2 line of Star Wars action figures. I don't know if you guys remember this. They were produced by Hasbro. A good way to remember them, if you ever see the figures, they have either an orange or green card back. Those particular figures, when they hit store shelves, there was a massive speculative frenzy to buy those figures because everybody thought that they would go up in value like the vintage stuff, the original coveted Kenner vintage Star Wars line that lasted from 1977 to 1978 all the way up through 1985 roughly. Well, we all know today, if you're going to invest in vintage Star Wars toys, you're going to go after the coveted Kenner line. You're not going to go after the Hasbro reissues from the mid-1990s on up. Everybody pretty much hoarded those items, and we see what they're worth on the secondary market today. Now, unlike and almost like, this is where it gets a little bit confusing, a speculative bubble, a speculative frenzy represents a period of intense and often uncontrolled consumer activity or excitement in a particular market or asset class. Now, I want to repeat that because this is where modern era Pokemon cards are today. So let me repeat this definition for you. A speculative frenzy represents a period of intense and often uncontrolled consumer activity or excitement in a particular market or asset class. Now, this is the key difference between a speculative frenzy and a speculative bubble. A frenzy is a more intense and possibly shorter-term market dynamic that can contribute to the creation of a speculative bubble or occur on its own within a particular market. Bubbles are typically characterized by a longer-term trajectory of unsustainable price increases followed by an inevitable sharp decline. This is why if you go back and you look at what happened with the great video game bubble, it literally lasted several years. That's why there were people, when I was warning everybody that that market was in a speculative bubble, there were people coming to me, well, Sean, this has been going on now for 18 months. This is going on now for 2 years. Obviously, you're wrong. Not understanding. Speculative bubbles can last for years. In certain cases, speculative bubbles can last for decades. So this is something that you've got to understand if you want to truly understand economics and more specifically, especially if you're in the antiques and collectibles trade, collectible finance. Now, if we look at the current dynamics of the modern era Pokemon marketplace, if you notice what is happening right now in the marketplace for a lot of the prismatic evolution cards and the like, if you notice there was a massive frenzy to get those products, prices for a lot of the single cards as a result started to skyrocket in value. Now we're noticing that a lot of the prices of those cards are starting to come down a little bit. This shows you that the market dynamics for modern era Pokemon cards are more along the lines of a speculative frenzy than that of a bubble. This is important to keep in mind. Now, I don't want to go off on a tangent here, but I'm going to give you an example of a market that everybody thinks is in a speculative bubble that is actually not. If we look at the current real estate market, in the United States at least, that market is not in a speculative bubble at present time. Reason being is there simply isn't enough supply of single-family homes in the United States that are affordable to satisfy the current demand. As a result, the only way that market can crash, and even if we enter a recession, it's not likely to crash, is if there would be something systematically wrong with the overall economy. Meaning if tomorrow we woke up and we were pretty much facing a nationwide, worldwide depression, then of course that would affect real estate prices. But unfortunately, the current real estate market dynamics that is taking place in the United States are completely unlike what happened during the 2008-2009 financial crisis. What happened in the 2008-2009 financial crisis was directly correlated to the real estate market. In the year 2025, the reason why a lot of you out there cannot afford your own home is because demand is at an all-time high because there isn't enough supply on the market to satisfy that demand. And unfortunately, that's not going to self-correct anytime soon. Now, if we would enter into a recession, yeah, it's possible prices will pull back maybe 10, 15%, possibly 20%, but it's not likely due to the fact also, if we did enter into a recession, the government, the Fed would cut rates, and there's always people out there that have a ton of money. They would be chomping at the bit to buy up those houses, especially if prices fell. So I just want to bring that up. I don't want to go off on a tangent. Just keep in mind, real estate prices in the U.S. are not in a speculative bubble at present time. In all honesty, it's not even a speculative frenzy. It's simply a pure product of supply versus demand on the open market. Now, modern era Pokemon cards are in a speculative frenzy, not a speculative bubble. Caution needs to be exercised as a result. Throughout the history of the antiques and collectibles trade, anytime a collectible was in a speculative frenzy, the market in question failed to produce returns over the long term that outperformed the overall stock market. This is why I agree with Rudy with Alpha Investments when he tells you guys that most likely going forward, modern era Pokemon cards are not going to be able to outperform over the long term a simple S&P 500 index fund. This is where we are in 100% agreement on these current market dynamics. Now, a couple of last points here. Speculative frenzies are just as dangerous as speculative bubbles, and the question has to be asked as when is the best time to sell an item that has accelerated in value on the secondary market. Case in point, if you bought a booster box of Evolving Skies for less than $150, less than $100 on the open market, you did fantastic. However, at the time I'm recording this video, a factory sealed box of Evolving Skies is roughly sitting at $2,500. If I were to ask you, is spending $2,500 right now on an Evolving Skies booster box wise? I'm sure some of you would say yes. In all honesty, though, I don't think it is a wise investment, especially over the long term. So this is why speculative frenzies are inherently dangerous. Eventually, the speculative frenzy that we're seeing for modern era Pokemon cards is going to end. And unfortunately, when it ends, that's when you're going to have all these individuals that bought all this modern era product that they're now sitting on. And when that price pulls back, because that's what's going to happen when demand pulls back, that's what a speculative frenzy is. It's pretty much over demand for a lot of these items. Prices are going to fall. And that's where a lot of the Timmies, Kimmies, and Poindexters that are hoarding this stuff in mass, that's where we're going to be in a very bad situation. So that's the whole point of this video, getting you to understand that right now, demand is at an all-time high for modern era Pokemon cards. If you are investing in this market, you are betting that, let's say that you're holding these products for 5, 10, 15, 20 years. You are betting that demand is going to be higher than it is right now in 5, 10, 15, 20 years into the future. Not understanding that Pokemon products right now are already at an all-time high. So do you understand why I urge caution in this market over the long term? Now, if you are one of these people out there, maybe you get these products through a distributor, maybe you're paying a below retail rate for them. If you want to speculate in those type of items over the long term, that you are paying less than, I hate to use this term, the MSRP price, you do you. That is a viable strategy, because at that point, you are pretty much operating with the benefits of being a business, not an individual investor or speculator that is going to Costco, that is going to Target, that is going to Walmart, that is pushing some 14-year-old kid out of the way to get these cards at their suggested retail price. Do you understand the dynamics of this market? Again, to sum this video up, modern era Pokemon products and cards are in a speculative frenzy at present time, and demand is at an all-time high right now. If you're investing in this market, you are pretty much betting that 5, 10, 15, 20 years down the line, demand is going to increase. I am sitting here telling you that your entry point matters as to whether or not you want to take that risk. Again, if you're somebody like Rudy, you're somebody like SM Pratt, you're somebody out there that can get these products below their market retail price, it may be worth it to you. But for the average person, I do not think that modern era Pokemon cards and products are going to continue to outperform a basic S&P 500 index fund. And remember, an S&P 500 index fund is 100% passive. There's virtually no fees when you go to buy and sell. So that is what I leave you with in the conclusion of this video. Let me know your thoughts in the comment section below. If you are subscribed to this channel, I will see you in another upcoming video. Thank you for watching.